What's going on, everybody? It's Jeff here. Welcome back to the channel. What a dynamite day in the market today after the Fed minutes were released yesterday, and Jerome Powell had stated that the easy money policy is going to continue until the labor market and economy recover a little bit further. That is a green light go ahead for investors, stating that the market is going to continue its bull run. The SPY bounced heavily off the 100-day moving average. There is a couple changes in the Fed minutes that I do want to discuss with you guys, and just to see how things are going to play out in the future. And I also want to talk about AMC sitting at that $40 level of support. A couple things came through that I want to mention to you. So let's get right into it. First off, take a look at the SPY ripping out of the gate, uptrending all day long, almost hitting that 445 before slowly trending back. As you can see from our beautiful daily chart, we continue to cover all the time. I zoom in real quick. You see that monster bounce off the 100 moving average, which we haven't hit all the way until back in, let's see, back in November of last year. We were trending off that 50-day moving average. And like I stated, as soon as it breaks through that 50-day moving average, it would go right down to the 100 moving average. Didn't think it would happen in a day like that, and immediately bounce back up. The SPY is going to continue running strong. So let's take a look at the full recap of the Fed minutes. A couple things I will say. There's still going to be $120 billion of asset purchasing, and they stated that they may slowly begin the process of their purchasing. They do still expect the purchasing to fully end in mid of 2022. So that stayed the same. The interest rates are going to stay low. Everything pretty much stayed the same. The only thing that really changed that is worth mentioning is they increased their allowances for money to be parked into the Federal Reserve, which is the reverse repo, from 80 billion to 160 billion. So I believe today they had 1.33 or 1.35 trillion accepted. And we were hanging around that 1 trillion, 1.1 trillion for a while. Expect that number to increase, as like I said, the allowance has just been higher. And these big money, institutions are still feeling that these long-term investments are not that wise right now, because we are overextended, and the government is still actually facing a shutdown if the debt ceiling does not get raised. Mention to this, everybody, I will say this for some people that are nervous. They've never defaulted. The United States has never defaulted on their debt before. And I would be surprised, just because, like I said, it's never happened before. I would be very surprised if this was the first time. However, yes, the market will be in full panic if that does happen. Chances are, because history tends to repeat itself, it's never happened. I would expect something to be made up of that. So keep that in mind going forward. I do want to cover a couple of our plays really quickly that we had today. One of them, which did not do well for me, is, I will be honest, it was Neuro. I will actually type it in and be fully honest with my shortcomings. I had said it needed a break above that 14.75, which it got. I figured it would go about $1. This one was a former runner between $1 and $1.50, and it really quickly went up to that 15.45 and immediately pulled back down and never saw that again. Some people did get in and out of it quickly. I was lucky enough to get in and out of it very, very quickly. However, my gains were pretty much next to nothing. I think, in like $60, pretty much next to nothing, but a lot of people did kind of get a little bit burnt on that. So that one was a bad call by me. I will be fully honest with that, and I apologize for everybody who is in the group that did take a loss on that. One of them I will call, it was absolutely phenomenal, was MRN. This one ripped. Once it got above that resistance of $15, it went all the way up to $18.50, got stuck in a halt. Some people had some really great gains on that. Now, two plays I am going to call out, which is awesome from everybody in the group, and I hope you're watching this video, is because they're starting to find these plays on their own. They saw RNAZ, it popped up pre-market, it was gapping up, it hit a little bit of resistance around that 370. They saw that break at 370s, as you can see right in here at about 948. It ripped above that previous resistance, came up, popped up a little bit, could have taken some profits there, bounce off, which was once previous resistance, which is now support. They rode it all the way up for a massive, massive gain. The next one I'm going to call out too, which was not on my list, and shout out to everybody, was Sava. For everybody that's been kind of bag holding this is your chance, getting up to almost $63 today. They took this at pre-market. They saw that previous resistance of 52.70 as of yesterday, right before market close, and also saw it pre-market. Once it got that rip above, that's your green light to go ahead. We don't try to hit the valleys, all right, and try to hit the peaks. We wait for the stock to make a move and show us which direction it wants to go. And they rode this one for massive, massive gains going forward. Sava is still have lawsuit issues, so there's something to be very, very careful on. Now let's talk about AMC before we look at the chart. A couple things I want to mention. I thought this was a phenomenal article that came out actually 2 days ago. I wasn't able to make a video yesterday saying Blackstone top list of stocks that short sellers might be tempted to cash in on. Obviously, any type of closing of position will absolutely skyrocket that price, especially if there is massive, short coverings will actually skyrocket the price. Another one was an awesome tweet that came out earlier this morning from Charles Payne, just showing the retail purchases in the millions of dollars in the past 5 days. AMC number 3 sitting at $90 million, and that's all retail on the buy side. So there are individuals are still getting into us. There is still a little bit of nerve from some of these professional, retail retail traders, which I understand, just because they are completely all about the patterns. That's all they care about is the patterns. But as you can see, it hit a little bit of resistance, broke a little bit of that support. I was talking about that $45 and $43 level, and now we're getting a curl bounce off that $39 level of support, hanging around that $40 psychological level. So if this curl continues, expect more buying pressure to continue to go up to it. If this curl also can continue and we can maintain a new level of support, we're hanging above where we were at that $32 level. Another thing I will mention, which Wrench Capital had tweeted on, and I'm sure he will cover in his video later on today, was that the IV was at, I think he said, about a 12-month low in the options chain. So that's actually a really bullish setup, because when you're into options, and I stay away from AMC options, trust me, they were lucrative a long time ago, and they haven't been in many months, so I completely stay away from them. They're very volatile, and the market makers will completely play you and take your money. However, when the IV is much lower, it is a bullish setup for anybody who is buying options. When the IV is really high, it's more beneficial to sell options. So it will entice other individuals that are professional options traders to jump in to continue this price moving forward. The last thing I will say about AMC, and this was a screenshot from the Bloomberg terminal. Someone posted this in the group. I'm sorry if it's a little fuzzy, but 1.8 million shares from Virtu Financials at 1011 showing on the buy side. We also had another 2 million block coming through a little bit before that. So sometimes these prices, because especially big blocks like that, are done on, most of the time are done, if not all the times, are done in the dark pools. We don't get to see a lot of that pressure being built up right away, as if you would if all of a sudden a whale would come in and buy 100,000 shares. You would immediately see the price, that whole huge candle just immediately wick up. But expect to see that coming through in the future, because like I said, from a standpoint, there's still going to be a lot of bulls in on this. It is a little bit trending with SPY. I mentioned that. I know we're a little red today, and SPY had a massive move today. But if you look at some of the patterns, it's been starting to trend. I've noticed that over the past few weeks. So like I said, when the market's bullish, it's going to continue to keep AMC moving forward. So I'm going to continue to monitor this. I love watching this stock. I still hold, all my positions in this, and I'm still loving absolutely playing these quick trades, because I was not always, I don't call myself, a day trader. It's much easier to be able to buy a stock, like we did back in, October, November, December of last year, buy it and, wake up in the morning and check, oh, I'm up pre-market, check again, oh, I'm up, I'm up again pre-market, and just reaping in all those gains. But this isn't the market that we're in on, even if you look at some of the other stocks, that they just don't have that massive amount of range, and you never know what's going to happen overnight. You look at Monday, it was a massive bloodbath. So, it's nice to be able to avoid some of those by playing some of these quick stocks, and we get to have fun doing it. And money is starting to shift back into these small caps. We saw that leave, once February hit of this year, a lot of money went out of the small caps. That's when some of your cyclical stocks and your recovery stocks, were beaten down so bad that investors were really pouring money into them. And treasury bonds were rising. So investors did probably pump a little bit of money over into that, as we saw that rise going up. So, but that's it for this video, guys. I'll keep you posted. I'll see you in the next one.